is Thursday, the 29th of September, 2022. Time just getting on to 8:30 a.m. Central Time. It's going to be an interesting day today. Many markets have been fighting in this downtrend as of yesterday to lose their bearish embedded slow stochastic readings. Now, for those of you that have taken my enhanced Bollinger Band course or keep up with me as a minimum here in these videos, you know the importance of that. That would mean more of a rally. If, on the other hand, that was the rally and the market keeps it, and we end up, say, down hard today in the stock indices, well, that means you probably had that one bounce, and now you're going to have some more problems. On the energy market, OPEC has begun the ministerial part of the meetings for the October, I think it's now 5th, meeting where they will decide what to do with production cuts. You notice the word I said, cuts. They are not going to sit still, in my opinion, and say they're very comfortable right here with the 100,000 barrel a day cut. I think you already know Russia wants 1 million barrels a day, but Russia wants to hurt the West. So that isn't going to be on the table. So the question is, what is realistic? In the grain markets, as we're coming up here, the big question is the corn market. As I look at corn, if it can't clear at the 678 level, then the market probably, this is the bounce, and then we go back with some resistance pressure to the downside. Notice the bonds and notes. You're adding, again, yield to this market. Why? Well, let's take a look for a moment at what we got in the way of a report. Let's go right to the jobless claims. Down 16,000. These are not the numbers the Fed wants. Fed wants the jobless claims to go up, and it wants continuing claims to go up. They don't want to see that these numbers are falling. It means the labor market is staying super strong. Their policies haven't yet caused the unemployment factors that they want. Now, it's claims. It's not the jobless number. We're going to get that, I think, next week. So that will be the first of a series of numbers, that, then the CPI, and then, of course, we get the Fed meeting as to what's going to happen at the November meeting. But we're all watching it, and that's what you have to go off of. When you take a look at what they're looking for in the natural gas, they're looking for another build. We just keep building at this time of the year. And you have to understand, how many of the homes in Florida in 80-degree weather don't have electricity and are not burning natural gas right now? So that's going to build for the next report. Just keep that in the back of your mind. You got to think these things through ahead of time, but that comes from experience. Second quarter final GDP, these numbers are very much in line with what the market was looking at. The consumption up a little bit more. That was the number that I saw as the standout. Core PCE, that was up a little bit too. So are these numbers going to be what the Fed wants? No. They want to see lower consumption. They want to see demand destruction. But that is second quarter final GDP, and a lot has happened since that went on. So as I look at these markets, trying to figure out what to do, my work would like to see a big break in the stock market today, a continuation to the downside. My work is questioning, was the dollar overdone yesterday? Foreign currency markets, the pound, Ms. Truss had a press conference today, and she is trying to say, hey, we need time, let these things go. We're not going to know for weeks on end just what she and her the finance minister are going to be coming up with and how they're going to clean things up for the central bank, which is caught in a real problem here because the policies are so different between Parliament and what the bank's doing. The bank wants to increase interest rates, fight inflation, and Parliament there wants to ease everything, help the people, cap energy bills. Well, how do you pay for all that? That becomes it. Tax cuts. Where do you go with all this? So an interesting time, and what I call today a big churn in these markets, but I'm going to go on record with you. I think today is one of these days that you've got to keep your eye on everything very tightly. Now, my staff asked me to keep one more day, my special report. It should have gone off last night at midnight. We're going to leave it run into the early part of today, and then this report will come off. I think it comes off around 1 o'clock Chicago time, that is Central time. So you haven't seen my report. I think it was right on the money, by the way, on both the weekly and the daily. S&P, the Dow, the NASDAQ, and the Russell calling for a bounce, which we've gotten. what's the next step. I lay it out here for you. In fact, I lay out a series of steps here that I think will carry you into January. So if you're interested in seeing that report, this is your last day to see it, the last hours to see it. Take advantage of it by going to iraepstein.com. When you're at iraepstein.com, just go right to the area market research. Now, if you like a free sample of my regular daily reviews, everything we've got going, it's yours for free to give it a try. Step over to the free offers and you can keep up with all that I'm doing. You'll get access to my morning subscriber videos for both ETF spiders stocks and the futures one, as well as my twice daily written updates and the monthly, and it's perfect time to sign up today, not the monthly, but the weekly reviews where I do all weekly charts and give you the bigger picture on the whole array of everything, spiders, ETFs, stocks, and of course the futures markets. I'm Ira Epstein. I'll see you at the end of the day, hoping for the market to be down. You take care.